Welcome back. You're watching Startup Street. It's time for us to move to our segment Investor Eye. Joining me today is Vikram Chachra, a serial entrepreneur and investor who has built and backed mobile-first startups since 1999. Initially as a Silicon Valley founder and now in India as an investor. Today he launches his new fund, 8i Ventures. Vikram, many thanks for joining us and many congratulations on launching your new early-stage VC fund. And tell us, 8i Ventures' mission essentially is to kind of upgrade how India lives and works. Now, how do you plan to do this?
Sure. Shruti, thank you for, first of all, having me here.
Yeah.
If you recall, we met sometime last year.
Yeah.
And I promised you we will launch our fund on your show. So I'm delighted to be here. Thank
you for breaking this news on Startup Street and saying true to your word. Yeah. Tell me, Vikram.
So, Shruti, if you see this, the show today itself, Lata came, she talked about a slowdown. Then Mugdha came and talked about how, online sales are soaring. So there's a clear contrast between two Indias that are emerging out here, right? One part of India wants to upgrade how it lives. And that part of India is actually emerging from low income to middle income, right? They will upgrade at every opportunity they get their particular standard of living. They would rather upgrade than save. So there's a real shift in value that is happening. And we are trying to cater to this segment. And we are saying, where are those brands when these people want to upgrade, essentially?
Okay. And you're going to back 100 challenger brands over a decade, right? So what are you going to look for, Vikram?
So it's kind of interesting. We are seeing challenger brands emerging across a spectrum of products and verticals. We are focusing on consumer and fintech because we think these are the two sectors which will drive the growth of the economy. A challenger brand gets created when a consumer who is a perfectionist gets frustrated with what's available. So they start to think, what if? They start to think, what if I was to reimagine this product and build it for myself, right? So if you see, as we talk about our portfolio, all our founders have actually created these products for themselves fundamentally. And so the challenger brand fundamentally challenges the status quo and comes out with a reimagination of what they would like. This product or service has to align to their values.
All right. So, talking about 8i Ventures and talking about the founders that you just mentioned, you've made two investments already, Blue Tokai and Monks. How much money have you invested in these startups and what essentially attracted you to them?
Sure. So we invested about $500,000 in each of these. These are early stage rounds for us. Blue Tokai, I was an investor personally more than 2 years ago. So when we launched the fund, by that time we got to know the founder, so we added him to the portfolio, added the company to the portfolio. Monks is a very early stage company. So let me just come back and explain. So my partner Vishy and I, we are both coffee nuts. And in Matt Chittaranjan, the founder of Blue Tokai, we found a person who is as obsessed about having that perfect cup of coffee, right? And with this obsession, Matt started with one single store in Delhi. He sources his coffee directly from farms. And now, of course, he's becoming a national brand. I'm sure you know about that. And doing really well. Monks, again, was started by 3 founders who were looking for the perfect cure for a hangover, right? Which is something we were also seeking. Right? And they're very early stage. So it tastes like ginger soda, and it just works.
Okay, so you've tasted that a lot, I believe. So, moving on, what are the kind of sectors that you're looking at? Now, these two companies are F&B. What are the other startups that you'll be, betting your money on? And also, what is the investment corpus that you've really set aside?
Sure. So, we've raised some money, and we're in the process of raising capital at this point of time. We are looking at consumer and financial services. These are the two sectors which are driving the growth of the Indian economy. When Prime Minister Modi's dream of 5 trillion gets achieved, we think these two sectors will have a large portion of that going on for them, in these two sectors. When we look at consumers specifically, we tend to look at products which are just like raising the bar for any particular category, right? There, when we are looking at it, we are thinking more in terms of a founder who wants to radically change the experience, right? When we're thinking about, so that could be a niche product. It could be, so when we size the market, we are not so worried about what is there currently. We're looking at the size of the problem. So when we looked at, for example, the hangover drink company, We said, is there a suitable cure? Does it work? Actually, we found very little. But when we started thinking in terms of the number of people who wake up with a hangover, who would not want to have a hangover, we realized that's a gigantic market, if it can be solved, right? When we think of financial services, our thesis is very simple. We're thinking of how can we make money frictionless. There is way too much money in friction in money. And so our thesis is that every financial transaction from start to finish, including opening a bank account and KYC, et cetera, should be done under 5 minutes. So I operate from a 5-minute bank thesis. If you put all our fintechs together that we have funded, you would get a 5-minute digital bank.
All right, okay. Now, you've written the first check in most of India's, successful consumer startup companies, be it EasyTap, MoneyTap, Carvale, and these companies have created their own categories, right? So what are the kind of returns that you've seen of your investments? It's 50x, I know that much.
Yeah, that's 50x on my original investment, which I have been recycling. So what started as a hobby and a passion, has over about a decade become a full-time profession, and now evolved into a fund, which we are opening to other people. So initially, my thesis really was, how do we remove friction from customer journeys in India? So if you see, Carvale, we seeded them in 2007. Mohit Dubey, the founder, was removing friction from the car buying process. And he did such a tremendous job. I remember we invested at about 2 million or so valuation, or even less. Today, I think he got merged, and the combined entity is worth about $500 million. So you can see the kind of value accretion that happened. Of course, we exited earlier. EasyTap, again, was solving for how do you pay for with a, when you get your e-commerce deliveries initially, how can you pay by card? So Flipkart introduced cash on delivery. EasyTap added credit on delivery. And again, that company, from the time we invested, from the first check, is up about 60, 70 times.
Wow, okay.
Right? MoneyTap, similarly, how can you get one-touch digital credit, right? And of course, that investment has turned out really well.
So, you've seen great returns. You've seen lots of M&As. You've seen, 2 IPOs. Do you think that a VC's success depends on these billion-dollar exits?
You got me to my favorite topic.
Okay, tell us.
Actually, it comes down to portfolio construction. All of VC success fundamentally depends on putting your maximum money behind your biggest winners. So if I have a $100 fund and I put $1 in 100 names and one of them becomes a unicorn, and I own only 1%, it means nothing, right? But if I own, let's say, even as a small fund, 10%, right, and I have few outcomes, I may actually return the fund, I may even make a multiple. So for us, we don't really look at billion-dollar exits because they are far and few. We believe that we can still generate very healthy returns on a small fund with a series of exits about 100 to 150 million.
All right. Now, Vikram, before I let you go, what has been the biggest learning as a VC over the last 2 decades?
If I may break it down to three learnings, because there's so much to learn. One is we think that capital is a magnifier. It's not a solution. If you're doing something right, capital will magnify it. If you're doing something wrong, it will also magnify that. If your unit economics are wrong at the beginning, you will make more and more losses. If your unit economics are good, so that is one aspect. The second thing we believe is that this early period, very early, when the company is getting conceptualized, the idea is getting conceptualized, that is a period when the umbilical cord is getting formed between the founder and the venture. And that, I believe, is a very sacred time. And I think as an investor, you have to really be there nurturing the company, guiding them, and not interfere with their process. So I worry sometimes that when too much capital comes in too early, that disturbs that moment.
Yeah. And also I read somewhere where you've said that 80% of your learning is to kind of get the startups before anybody else gets them. Is that true?
Well, look, we are now living in a world of a lot of capital, right? And the best founders have no problem raising capital, raising money. So I believe success in VC today depends on the founder choosing you. Versus you choosing the founder. All
right, Vikram, on that note, it's a wrap on this edition of Startup Street. Stay tuned to CNBC TV 18 as news continues on the other side.